Investors have spent years trying to get exposure to the private space economy. Now that SpaceX is public following one of the largest IPOs in history, the question isn't whether it's an extraordinary company, it's whether it's an extraordinary investment. Hello and welcome to the Expert Exchange. Joining me today is Alpha Ba, Chief Investment Officer at Pillow Investment Partner, a global investment firm focused on identifying long-term opportunities across markets. Alpha, great to have you with us.
Thank you for having me.
SpaceX came to the market at roughly a $2.2 trillion valuation, making it one of the largest IPOs ever. The stock surged after listing before pulling back sharply. Before we get started, Alpha, what is SpaceX?
So SpaceX has three businesses. Has a wireless broadband business called Starlink, which is the biggest slice of the business, about 60% revenue. And it represents about $4.5 billion of EBITDA or operating profits. So all of the profits come from the connectivity business. The second business is a space launch business, which launches rockets into space. That's about 20% of revenue, $4 billion, and it has about $700 million in losses. And the last piece of the company is an AI offering business that's about $3 billion in revenue and has substantial losses, about $6.5 billion in losses.
All right. Now, from Pillow Investments' perspective, what was your initial reaction to the IPO and the market's enthusiasm around it?
So we're always very careful about IPOs because generally they don't do well at the entry price from a long-term compounding perspective. So the valuation here was not attractive to us. Stock came in about 125 times price to sales. From a price perspective, it came in at 135, went to 225, and now it's back down to 156. We think the stock is overvalued, and we're not interested at this valuation.
Now, for many investors, the excitement isn't just about rockets. It's about the businesses being built around them. Let's talk about the investment thesis. When you evaluate SpaceX, where do you see the greatest opportunity?
Sure. So from an investor perspective, we always look for disproving evidence, evidence that disprove the prevailing thesis, evidence that disprove the prevailing narrative, evidence that disprove the bullish cases. So if we look at Starlink, which is the most attractive part of the business today, the remote broadband business, the two key questions are really, is Starlink a toll road operating business, or is it a growth story? If it were a toll road business, then you expect the next customer to come in at a very high margin. So if you think of a toll road where the investment has been sunk, the cost has been sunk already, the next million customers, million drivers come in at very high margin. Or is it a growth story where the next customers come in at lower and lower margin because the average revenue per user is going down? So we think the early evidence suggests that Starlink is akin to a toll road business. And the reason for that is average revenue per user has gone down from $99 about 3 years ago to $66. Yet the number of subscribers has gone up dramatically to about 10 million. So they're gaining more subscribers because of lower revenue per user, yet the margins are going up or being very high, at least 35 to 39% operating margin. That's a very attractive flywheel business. So the evidence points towards toll road rather than growth. And that is very attractive from an investment perspective. The problem is that attraction is being detracted from the other pieces of the business, like the AI business, which is loss generating.
Well, then is Starlink essentially becoming a hidden infrastructure monopoly, or is the bigger story still ahead?
Well, it has some elements of a potential monopoly. I can't say it is the case today, but it definitely has the potential to become, if not a monopoly, at least a dominant player from a rural broadband perspective globally.
Now, some investors are concerned about a lack of profitability with SpaceX. What are your thoughts on that?
We think that the lack of profitability narrative from a SpaceX perspective is overstated. Basically, we think that the losses there, about $700 million losses in that segment, the losses are reinvestment, not weakness. And the reason is you need a lot of launches to drive down the cost per launch. So you need to get external customers or internal customers. SpaceX is getting internal customers through Starlink. About 70% of their launches are from internal customers. So what that does is it continuously drives down the cost per launch, and so it makes the economics of the business better and better because they benefit from scale advantage. So now they can get the next launch, whether it's internal or external, for a much lower cost. So the margins should improve over time. We think that there's an attractive flywheel in the space launch segment.
And of course, with transformational companies, the upside story is usually accompanied by equally significant risks. From your perspective, what are the biggest risks investors may be underestimating today?
Yeah, sure. We think there are three risks. As I mentioned in the description, the Starlink business and the launch business are attractive, but you can't own them without owning the non-attractive AI business, which is very heavily loss-making with very uncertain pricing power and weak competitive advantage. So there are three different businesses on three different multiples. I think that overall the valuation is too rich. The second risk is from a capital allocation perspective. There's a lot of money being invested in the AI business with unattractive economics. After raising $75 billion, SpaceX went and raised a significant amount of money on the debt side. So the business, the AI, and all those funds, most of those funds are being invested in the AI business, which is very highly capital intensive and very low profitability, if any, because they're loss making. So the capital allocation is suspect, and they also bought a $60 billion company recently, which makes us worried because we're always worried about large acquisition. And the third risk is from a governance perspective. Elon Musk owns 42% of the stock, but 85% of the vote. So essentially, there's no independent board that can rein him in if he needs to be reined in, and we cannot diversify the governance of the portfolio. That's not something we can diversify. So these three risks are very important to us.
Now, we talked about the risks, and given all of that, would Pillow Investment Partner invest in SpaceX today?
At this point, no. We're not going to participate in SpaceX investment.
And what would need to happen, whether it's valuation, governance, or greater proof of execution, to make SpaceX attractive as an investment opportunity?
So again, we think that SpaceX has some element of high quality compounding, which is attractive. So valuation would need to come in to a much more attractive level. Profitability would need to be more widespread. Certainly on the Starlink, we need more confirmation or continued confirmation that this is like a toll road business. The launching business would need to become more sustainably profitable, and we could get this proved with AI becoming more profitable, even though we think that is unlikely. And then we also would like to see some improvements from a governance perspective.
Thanks, Alpha. It's a fascinating investment debate because SpaceX appears to be both a mature cash-generating infrastructure business and a highly speculative tech company at the same time, a combination that could create enormous value or significant complexity for investors. Alpha Ba, Chief Investment Officer at Pillow Investment Partner, thank you for joining me today on the Expert Exchange.